Hi, this is R Sundar. Many people ask me one question. What is the effect of Corona? Will the market retest 7,500? And you go to social media, everybody is talking Nifty will be testing 6,000, Nifty will be testing 5,000. And there was one guy who was telling me the Nifty will be testing 800 also. What will be the effect of all these problems in stock market? What will be the view of the market for the next 1 to 3 years? Basically, what is my view for the long term? And to see where our market will be heading in the next 2 or 3 years, we need to see how the markets have performed in the past during this kind of crisis. Long-term view of our markets, bull or bear or bunny. So bull means market going up, bear means market crashing down, and bunny means market neither going up nor coming down, going up, coming down, going up, coming down. It's a trading within a range. Here, let us look at the 100-year history of Dow Jones. So this is a chart which is showing 100-year history of Dow Jones. You can see from 1896, that is when the Dow Jones started, and for nearly 20 years, it was actually in a consolidation mode. But though it looks like a consolidation, from the low of 42 to 103, it's almost double. But then from 103, it has come to 53. So within the long-term view, there will be short-term ups and downs where even the index has doubled. But if you look at the long-term view, for nearly 25 years to 30 years, market was in actually a very consolidation mode only. Then after that came a very, very big bull run. You can look here, from the low of 64, it went all the way to 381, so which is nearly 6 times. But then this is 1929, where the Great Depression came. I'm sure you must have heard Great Depression. If you have not heard it, you can search in Google. And the markets crashed like anything. And you can see from 381, it came all the way to 41. So it was almost 90% crash. At the lowest point, it was 41. So this was a biggest crash in Dow Jones history. Then, whenever there is a big crash, after that, the market reverses. It retraces. It retraces at least 50%. Then after that, again it goes for consolidation. Again one bull run came. Again there was about 20 years of consolidation. And after nearly 20 years of consolidation, for another 20 years, the market continuously went up. You can see from here, the low of 776, and it went all the way to 11,722. Can you imagine? This is a 15% return. Imagine it is in dollar terms. A dollar term, somebody getting 15 times return in 15 years, that was a fantastic bull run. And I'm sure people like Warren Buffett would have made their fortune in this bull run. And now, in a longer time frame, market is actually in a consolidation mode only. And this is the Lehman Brothers collapse. And this is the dot-com bubble crash. So, I'm going to show you 3 major crashes in US market. One is 1929 Great Depression crash. And second one in 2000 dot-com bubble crash. And the third one, coronavirus crash. Now, what happened? Uniformly, in every crash, the market found some bottom. And after that, the market shot up. The market shot up here. The market shot up here, and the market has shot up here. So therefore, do not believe the people who are saying Nifty will come to 5,000, 4,000, 3,000, 2,000. Right? As far as I am concerned, 7,500 bottom has already been made. I am not expecting the Nifty to fall below 7,500 going forward. Of course, we cannot be 100% sure, but that may happen in case if coronavirus gets very, very nasty. Other than that, markets are expected to move higher in the next 1 or 2 years. Stock market movements are very difficult to predict in the short term, but in the long term, it's not that difficult to predict. As you can see, every crash has given an opportunity for the next bull. So this is the Dow Jones history. But what happened in Indian stock market? Indian stock market do not have a long history. So I'm taking for the last 30 years. In 1991, Arshad Mehta scam came. In 2000, dot-com bubble came. In 2008, Great Recession or Lehman Brothers collapse or subprime crisis, whatever you can call it as. But now people like to call it as Great Recession because in 1929, it was a Great Depression. Now it is Great Recession. And then in 2020, the coronavirus crash came. So in fact, the 2008 crash was considered as a once-in-a-century crash, similar to 1929 Great Depression. And people thought there will be no such crash again for the next 100 years. But unfortunately, this coronavirus has changed everything, and coronavirus has given a damage, if not more than Great Recession, it has given a damage equal to Great Recession. So, as I told you, if you are a long-term investor, and this is the right time to invest, but I'm not saying you have to invest all your money. You can invest something now. If the market falls 5-10%, again you can invest some more, and so on. So somewhere market will bottom out and the market will reverse. Now, I'm going to the ticker tape. So analysis software. I'm typing Nifty index. And I'm looking at the maximum. Though I put maximum, it is showing from 2000. And you can see, so this was a very, very big consolidation. And after the big consolidation, the market shot up. And then the market crashed. So this is the Lehman Brothers collapse. Then after that, market was consolidating. And now we have come to a very big crash. And now the markets are reversing. So if you look at the last 5 years, in the last 5 years, it has given only 11% return. So which means it has not given even 2% return per annum. Since the markets has been consolidating for a very long time, so logically speaking, the markets will have to break out. But when it will break out, that we do not know. Now, if you look at PE ratio, so it is trading around 16, and generally people say historically 15-16 PE ratio is a very good PE ratio for investment, whereas 28-30 is the time where you have to book the profit. And I will not suggest you to invest in individual stocks, but if you want to invest, you can invest in exchange traded funds. So there are 17 exchange traded funds which are tracking the Nifty 50. Though there are so many exchange traded funds tracking the Nifty 50, the most famous one is the Nippon India Nifty 50 Bees ETF. So this is a very, very famous one. So if you want to invest in market, instead of investing in individual stocks, I will suggest you to invest in this ETF. I will make another video how you can invest in ETF and how you can use that for hedging your portfolio, etc. And looking at the chart, as I told you, Lehman Brothers collapse, the markets recovered in the next 1 year. And in fact, look, at this point, it was from almost 3,000 to 6,000. So it has given 100% return after the crash. So the same way, here from 12,000, it has come to 7,500. And I can tell you, in next 1 to 2 years, I will not be surprised if the Nifty touches 15,000, giving a 100% return. So my suggestion is to invest in ETF. Either you can go for systematic investment plan, or you can always use the cash secured port. If you do not know what is cash secured port, you can watch it here. Remember, bull market is always born out of pessimism, grow out of skepticism, mature out of optimism, and die out of euphoria. If you are a contra investor, you should be investing in the first stage. Now, everywhere there is pessimism. And people keep asking, sir, coronavirus lockdown extended, why the market is going up, how can the market go up, market has to fall. I always say just for fun, for every bad news, if the market has to fall, Nifty will be trading around zero only. And there are many technical people, they will do, whenever market comes down, they will give target of 6,000, 5,000, 4,000. Whenever market goes up, they will give the target of 13,000, 14,000, 15,000. So, those technical analysts, I'm not finding any fault with them. They are the momentum traders. They are short-term traders. So, in the long term, it's only the contra investors win. And just look at even the individual stocks. I can tell you so many good quality stocks where the dividend yield alone is much more than the FD return. So that shows that very, very clearly the market has a very, very good value now. And you invest now, if you are not worried about the short-term volatility, 2 years, 3 years down the lane, I am sure you will be making a very good profit. And there is a joke. Those who are below 18 years, please don't listen to this joke. And the people say, the stock market is like strapless brazier worn by a girl. Half the people wonder how it is holding up. And the remaining half the people are waiting this to fall so that they can grab the opportunity. Well, that is a joke. Most of the people who are giving you the pessimistic view, Nifty will be testing 5,000, 4,000, 3,000. I can tell you, these are the people who are dreaming to buy all the stocks at a very, very, very cheap prices. That may happen or may not happen. And if you listen to them, you will never be able to invest. I've shown you the past data of Nifty, past data of Dow Jones. And whenever there is something bad, that is an opportunity to buy the stocks at a lower level. And if you are an expert in dissecting the financials, you can invest in individual stocks. If you are not an expert, you can always invest in exchange traded funds. And even if you are not interested to buy the ETF at the current price, if you are comfortable in buying at 7,000 or 6,500, you can always use the cash secured put to buy the prices at a lower level. So I hope you enjoyed this video. Thank you for watching.